So I'm not sure if you were aware of this, but the official kickoff to the spring housing season or selling season typically is referred to as Super Bowl weekend. So this weekend, folks, it is now spring selling season. Let's see what the housing market is all about. So when I think about the housing market and where we sit today, we have a market that is in need of, adjustments, inventory. It's just not a normal market. And as you heard yesterday, I do not see a normal housing market returning anytime soon. So when we think about sellers in the spring selling season, I think there are a couple of things we need to realize. First, the luxury part of the market, still seemingly lots of inventory, days on market, big price drops. Not sure. We did hear the other day about New York, right? What we saw in New York with their now $4,097 median rent, and that's actually Manhattan. So when I say New York, I should have been more specific, Manhattan. The luxury buyer is not buying, they are choosing to rent. So perhaps what we are seeing in the luxury market is perhaps more rentals and not purchases. What we are seeing in the buyer's market or the move-up market, the seller's move-up market, is they're on strike. A lot of you took time yesterday to reply to my housing market is broken video saying, Michael, you're right, I'm not moving. I got 2.8, I got 2.5, I got 3.1, we're not moving. Folks, this is the first spring selling season where those interest rates are going to matter. Now, in reality, it's not going to matter that much because typically you buy your home, you don't sell in year 1 or year 2. The average is 8 years, where on some occasions you are selling at year 3 or 4. I believe this interest rate lock-in that we are going to see in this spring selling season is something we will see over and over and over again. So the first thing that I expect to see in the spring selling season is sellers going on strike. Unfortunately, I don't think we get off the bottom of transactions, right? We got to 4.02 million transactions in December. We may go up or down 10% in transactions, but we are not going back to 6.5 million anytime soon. So for sellers, I think they are on strike. Let's talk about builders next. Builders. I think it's too early, but I think what you and I are going to see maybe come September, October, and November is builders are actually going to build smaller homes. I believe it was Pulte Homes about 2 weeks ago in the Daily Financial News after they reported earnings where the CEO says, we have to figure this out. We have to build smaller homes. And when I say smaller homes, you should translate that as cheaper, more affordable homes. Easier for the first-time home buyer. And now buyers. What are the buyers going to be doing? Unfortunately, if you are a first-time home buyer, your job's easier than 2020 and easier than 2021. But I am afraid, based on all of your guys' wonderful feedback, that entry-level homes, 75% of the area average that are done, right, fixed up, move-in ready, those are going to be hard to come by. They're just not there, right? So there will be opportunities for flippers. If you happen to be a flipper who is buying a rundown or broken property, I think you're going to have the opportunity because, again, an FHA, VA buyer, they can't buy broken properties. It doesn't work. So you got to buy right. You got to make sure your financing is right. You got to make sure you have multiple exits. So again, I think the spring selling season is going to be met with seller revolt or seller strike. I think rate volatility, while we've seen a lot here in the last 2 or 3 weeks and arguably over the last 3 months, I think it's going to start to flatten out. I think we get to terminal rate, right, in the next move or the move after. But very soon, we're going to start to see those margins compress. Prices, I think you're going to see median prices flat all year. I haven't changed my mind. Inventory, that's the the missing link, right? You and I all would agree. National Association of Realtors, I believe, just said existing inventory is at 960,000. I believe if you just look at single family homes, like Lance Lambert and others who are on this channel talk about, it's at 460,000. Either way, we're millions away from normal inventory. And if you look at the inventory and then you orient it away from luxury, it looks even worse. Luxury listings are distorting the market, so be careful. So that's the spring selling season. Other things we got: Lyft disappointment, bad earnings, lower forecast. Lyft is very interesting, right? We talked about Uber just yesterday having a blowout quarter, record revenue, 2.1 billion in rides, and then you have Lyft. You know, who is it? Pepsi and Coke? If that's the case, Airbnb, Uber with its dual model of rides and food, right? Uber Eats is killing it. Expedia, talk about a disappointing one. Expedia missed top line and missed bottom line. Maybe we're done with travel. I'm not sure. PayPal had a slight miss on revenue, but probably more importantly, their CEO is stepping down at the end of the year. Often when you see CEOs, even if they step down for retirement, it's often who is going to fill those, who's going to fill that. And then lastly, it does look like the market, both the stock and bond market, are starting to price in a soft landing, where you and I were laughing at the capabilities or possibilities seemingly 6 months ago. It looks like the markets are kind of orienting to a soft landing. Certainly by no means guaranteed. I don't think I've changed my opinion that the odds are 15%, but hey, it was 2% 6 months ago, so it almost went up 10x. Don't know if you've seen this, but gold, right, that yellow rock, is up 3% this year. Could be one of those years for the commodities, right? If the dollar weakens, perhaps gold, silver, platinum, palladium, if you are in the commodity space, might be a good place to be this year. Again, I have none of my own capital there, but I did think it was interesting that gold was up 3 years. So what does a soft landing look like? I think we've talked about this a couple of times, but for me, it's an unemployment rate sub 4.5. It is inflation sub 4%, and it is asset prices flat. To me, that's a soft landing. GDP kind of under 1%. Next, let's talk about what happens if home prices on a real basis, or I'm sorry, on a nominal basis, are flat for 5 years. Let's just play the game with me. Housing is flat for 5 years on a nominal basis. That would mean likely with inflation on a real or real adjusted, they're down. But again, remember all the housing stats are reported in nominal terms. And again, I see prices just like the early 80s being flat, even though rates are up, or Fed has raised rates 400 basis points. I got some very interesting data from Ryan Lundquist. If you don't follow, easy for me to say, follow Ryan Lundquist on Twitter, give him a follow, SAC Appraiser. He talked about some statistics from January of 2021 and January of 2022 that I thought were very interesting. Remember, Sacramento was hot, hot, hot. So would it surprise you? In 2021, 10% of the pending sales were done at list price. 33% were done below list price. So even in 2021, 1 out of 3 listings, 1 out of 3 pending offers was below list. And then finally, 56% were above, right? This January was the bidding wars, was the stupidity, was all the FOMO. It was a bad, bad look. Fast forward 12 months. At list price, actually pretty even, 9.6%. Last year was 10.1, call it even. But here's the big one. Last year, below list price, 33%. This January, 75%. And then finally, just to round it out, last year 56% above, this year only 15%. So again, what we are seeing is a housing market that is active. The bidding wars, the nonsense of 2021 is over, which I am really thankful for. Lastly, it's Thursday, so we got to talk about the weekly unemployment rate. Unemployment, it came in at 196,000 new unemployment claims. Last week was 183, so we are up 13,000. Again, we've got to get over 325,000, thereabouts is the estimate, to really start to see the unemployment rate tick higher. So again, folks, we are in Kuala Lumpur. It is hot, hot, hot. Hopefully you appreciate the view. We'll give you a little scan. That's our wraparound balcony. It's nice to be in a big room, I got to tell you. Big room on a ship, if you can afford it, definitely get a big room. We've done balconies before. Never again. Got to be a suite, got to be a big room. All right, everybody. Take care. Bye-bye.